Thanks everyone for joining us. This is a great topic that we love talking about, which is what is dividend-paying whole life insurance. I'm here with Barry Brooksby, so we're tag teaming as usual. Barry, welcome.
Thank you, Steve.
This is near and dear to our hearts. I know it's near and dear to Barry's heart. At Focus and with I&D, it's one of our primary areas that we love to focus on as what is dividend-paying whole life insurance. The goal for today's discussion is to help you, the listener, understand what dividend-paying whole life insurance is versus the other types of life insurance that are out there. So we want to give you guys a basic overview, provide key information, distinguish mutual versus stock life insurance companies, because that's a big deal in the arena of dividend-paying whole life. And we also want to talk a little bit about our criteria for identifying top dividend-paying whole life companies. And then Barry especially will dive into how dividend-paying whole life is strategically used. And at the end, we'll highlight maybe our top choices right now and why we tend to focus on these choices of companies. There's a lot of good companies out there, but we have some favorites. Barry, do you want to kick it off, kind of explain the difference between a mutual versus a stock company?
Yeah, in a mutual company, think about a company being owned by policyholders. A stock company is owned by investors. And the biggest takeaway from this is when a company pays dividends, who gets the dividends? In a mutual company, those dividends come back to us as policyholders, whereas a stock company, the profits and dividends actually go to the investors, those investors that are buying that company's stock, and policyholders aren't seeing those profits. The other thing between the two companies to really take note of is a mutual company tends to invest a lot more conservatively because they're not trying to appease investors with a quarterly return, Steve, whereas a stock company, they want to see returns increasing if they can quarter after quarter, which means they may not invest as conservatively. We've seen some stock companies get into trouble in the past, but a mutual company's overall investment portfolio is much more conservative because they are wanting to take care of us as policyholders.
That's key. So Barry, especially in this climate right now, I think you're talking about a very conservative approach. Why does that matter to somebody that's listening?
Ultimately, it boils down to risk and how safe and guaranteed is your insurance policy. You don't want to be locking into a life insurance policy that you're planning on using, that when you pass away, a death benefit goes to your beneficiaries and the company go out of business and you lose premiums or have some type of issue. So with a mutual company, because they're taking less risk, you have a more solid guarantee, if you will. It's a safer place to put your money. We also want to participate in the profits of the company and therefore in the mutual company earn that dividend. That dividend gets reinvested back into our cash value, greater compound growth.
Yeah, and I think you're alluding to some things that we're going to touch on in terms of our favorite companies as well. That's a great description. So mutual companies, you're participating in the benefits that the company is reaping. So the money is coming back to you as a policyholder. A stockholder wouldn't even necessarily have to hold a policy. Is that true in your experience, Barry?
That is correct.
So that's a big difference.
For a quick overview, look at this side-by-side list, mutuals compared to a stock publicly traded company.
Jumping from that comparison, dividends for mutual companies are a return of premium. That's kind of huge when it comes to strategically using policy dollars, correct, Barry?
Yeah, that's right. And as you think about a dividend being a return of premium, it sounds like, oh, we're all overpaying. But in essence, an insurance company is taking our premium and they're out investing. They want to make money. But they're also looking at mortality, the number of people that pass away, and then the cost to run the company. And at the end of the year, they're going to determine what are the profits, and they're going to give that back to us in the form of a dividend. It is a return of premium, but it does come back in the form of a dividend. And normally, we want to see that reinvested back into the policy's cash value So there's compounding effect on that dividend every single year.
So you've got compounding growth that is tax advantage there.
Yeah, I often get asked, how long have these companies paid dividends? And keep in mind, we're working with some of the top US-based life insurance companies, and Mass Mutual's paid dividends since 1869. And then if we look at the other company we use a lot, which is Penn Mutual, they have paid dividends since 1847. They've never failed to pay a dividend. This is how secure these companies are. So we believe they're going to continue to pay dividends, very strong US-based A+ rated companies, and we have those dividends reinvested back into your policy's cash value. So you're getting more compound growth on those policies.
Right. And we have some other webinars on that for you guys that are really digging in, listening. We've got a webinar on paid up additions, which helps you understand how dividends can be reinvested into a policy's cash value. A lot of other webinars. I don't know, Barry, if there's any you want to mention.
Well, I love coordinating these policies with real estate or your own business. So I would highly recommend those interested in real estate or growing your business, look at the specific webinars we've done that are infinite banking and real estate related, because you'll really see the true benefit of using the policy throughout your life. It's great we're getting all this growth guaranteed and the dividends are being paid, but what makes these policies even better is when you put them to use. As an overview, the mutual company advantages: policyholders are participating in the company's success. We're earning a dividend, it's tax advantage, and in a lot of cases, we can even use that money tax-free. The death benefit and cash value can be used as collateral, and then obviously there is permanent coverage and a death benefit for legacy planning, and the list of benefits go on and on with a mutual company.
Strategically designed dividend-paying whole life. You wanted to add this into this discussion, and just to give you guys a little intro, all dividend-paying whole life insurance is not created equal. There might be a lot of people that are trying to sell whole life and they do not understand this, correct, Barry, your experience?
True, and I see it all the time where someone will send me an illustration that another advisor has designed for them and it isn't right. And we want to emphasize that if you really want a strategically designed policy, it's got to be with the right company, it's got to be set up correctly day one, and funded correctly as well with paid up additions.
There you go. A lot of agents that may kind of moonlight, they're not going to have an idea of how to really maximize the cash value, I think.
Yeah, that's correct. And I am an infinite banking Nelson Nash practitioner. I work with clients all throughout the country. So this is what I do full time, day in and day out. Yeah. The main key is obviously properly structured. Has to be whole life, not another type of life product. It has to be whole life insurance with a participating dividend-paying mutual company. And something else to know is that there are other names out there for infinite banking, but it's all the same thing. You'll hear bank on yourself or the 770 account, cash flow banking, COLI and BOLI. It's all the same thing, infinite banking. The problem is people think, oh, if the name is correct, I'm getting the right policy. That isn't always true. So make sure you follow this criteria to be sure you're getting the best, most efficient, high cash value policy day one.
Yep, and I'm so glad you mentioned that. I mean, one of our mission statement items has always been to really lock into the most effective policy design for the infinite banking. So we're excited to work with Barry as our point person on the infinite banking strategies. One thing I do want to mention too is social proof. So this isn't just some strategy that we cooked up to sell product or whatever. This is something that the biggest companies, the biggest banks and corporations in America use in their own adaptation of it, but it's essentially the same thing. They're using high cash value life to supplement their asset base and to have liquidity and all these things. And so, Barry, I don't know if you want to speak to that.
You see these names, they're all recognizable, but Wall Street would have us believe that the only way to create wealth is in the market. And sure, people do create wealth in the market, but when you really see what the banks and corporations are doing and where they're putting their money, we would want to follow their lead because they're very successful. Same with very high net worth individuals. They purchase cash value life insurance because, as you mentioned, they want the guarantees, they want the access to the liquid cash, they want the tax advantages. So these are some of the names of companies that do exactly what we're talking about. And this is a small list.
Right, pretty standard stuff. So we've got some top companies. We've got a lot of articles featuring top dividend-paying whole life companies. I just threw together some of our top criteria. Everybody likes to ask, how do you come up with your best companies? And, most of the companies that are rated well, are good companies, but then it becomes a matter of how the company is situated, the kind of things they do, whether they're sort of what we call captive. And also there's, things about their dividend history, and that's not end all be all, but it's important. And then I think some of their options that they have, the companies compete, so they come out with these different options. Barry, I'll sort of pass it over to you. What do you look for when you're really looking for a top company in the dividend-paying whole life world?
Yeah, ideally, you want all of these with your policy. And it's possible to get all of these. The companies that we use, you get all of this and a whole lot more. Obviously, mutual is very important, and dividend paying. And it's funny because when I get calls from clients looking at this, they're telling me, Barry, I want a mutual company and I want to earn the dividend. And so I'm able to fulfill that every single time. You mentioned captive here.
Yes.
There are some companies out there that have captive agents where they only do business with that particular company. I'm independent, which means I can choose from the best of the best. And look, if one company isn't performing one year better than another, I'm going to go with the better company. I always want to give clients the best of the best.
Yeah, that's good. And some companies, they have a little more flexibility on the PUA options. If you want to be able to not pay into it 1 year or whatever. One of the biggest questions we have are captive, they're wondering why a certain company isn't in our top recommendation. Maybe it's a really big company with a huge budget. And sometimes it's just because they're captive. We like to have the freedom of choice there for the consumer. We get those questions, so I just want to make mention of it and kind of give people a clue as to why we make the suggestions that we do.
One last thing that isn't on the list that does come up on occasions, because we're encouraging clients to use their policy for banking, real estate, investing in their business, etc., is the loan rate. A lot of those captive companies out there have a higher loan rate, 8 or 9%, where the companies that are our top companies, their loan rates are at 5%. That does play a big role when you begin to use the policy.
Nice. Yep, that's important, obviously. And that goes to the question of tax-free loans and using policy loans to leverage your cash value. So you're really not talking about withdrawing cash. You're talking about using those policy loans, which are really easy to use and in the same theory as like a real estate equity loan, but much easier to use, much more available.
That's right.
Our preferred companies, I don't know if we're going to really throw out for public consumption all of our top companies, but you did see Mass Mutual there. Barry, do you want to mention any other companies that we work with?
Well, as we sit today in 2020, if you want the best of the best, which we encourage, go with Mass Mutual or Penn Mutual, and we're able to help you design those policies with those two companies. Mass Mutual has been around almost 170 years, Penn Mutual 173 years, and the absolute strongest top two companies for infinite banking.
Yep. Kind of closing with one of our favorite business gurus, entrepreneur gurus, Robert Kiyosaki. He talks about buying assets. One of the things I always like to try to encourage people is to think about assets. The wealthy buy assets, Secrets of the Wealthy is one of our ebooks if you guys want to check that out. And of course, cash value life insurance is an asset. We're excited to help people learn this because it's a powerful thing.
When you have a whole life cash value policy in your portfolio, not only is it an asset, Steve, it actually allows someone to have more opportunity in the future. Without it, they're limited. The policy actually gives them more opportunity.
Absolutely. And we've experienced it. I mean, we don't talk about things that we're not actually doing. Predictability, cash flow, leverage, liquidity, bundle of benefits to consider. If this is something you guys want more information about, we're here to help you. Click the link below to learn more, and you can schedule an in-depth discussion with Barry. I'm always available as well. Thank you guys for joining us, and hope this has been a great look into the world of dividend-paying whole life insurance.